Dear students, this video is made to make you guys understand the concept of journal entries, how to record a journal entry with the help of modern rules of accounting. Before understanding the concept with an example, let's understand the modern rules of accounting. In this picture, you may be observing the debit items and the credit items. Debit items here, as per the modern accounting rules, includes drawings, expenses or losses, assets. Assets includes current assets as well as fixed assets. Credit item includes liabilities, which has current liability as well as long-term liabilities. Equity or capital, revenue or income. The meaning of drawings is money withdrawn by an owner from a business for his personal use. If you are a owner of the business, as per the concept of business entity, owner is separate from the business entity. You know that. So in this as per that, here you can observe, if you are the owner of the business and you are withdrawing some amount or an asset from the business, your account is treated separately and the business account is treated separately. Hence, it will be considered as a drawings. Next, expenses or losses. Cost incurred and financial setbacks that reduces the profits of the business is known as any expense or a losses. That may be a depreciation, bad debts, etc. So assets includes current assets and fixed assets. Any valuable items owned by a person or a business is what we call it as assets. Assets has current assets, that is short-term assets, and long-term assets, that is fixed asset, which are used for more than 1 year. Liabilities are the debts or obligation owed to others that the business or a person has to pay to anybody, which is payable in nature, that we call it as liabilities, which are current liabilities and long-term liabilities. Current liabilities is within 1 year, long-term liabilities is more than 1 year. Equity or capital. Capital is usually invested in the business by the sole proprietor, partners of a business, or members of HUF. Whereas equity is a capital invested by investors in a business in the form of share. Hence, they are also known as owners of the company. Revenue or income. Money earned by selling goods or services is what we call it as a revenue. Any amount received for the benefit of the business is called as income. Commission received, profit made out of selling any goods, all those we call it as a revenue or income. Here, the modern rules of accounting says, if drawings, expenses or losses or assets are increasing, then we have to debit that item. If in case of decreasing, we have to credit that item. The credit items such as liabilities, equity or capital, or revenue item, if any of these item increases, we have to credit the item. If in case it decreases, we have to debit the item. We can remember this with a simple word, dealer. DEA is relating to debit items, drawings, expenses and assets. LER is relating to credit items, liabilities, equity and revenue. Let's post the journal entries with the help of these modern accounting rules. Here, let's start with the first entry. Somu commenced the printing business with the cash of rupees 50,000. Here, Somu, a person, is commencing a business, is starting a printing business with a cash of rupees 50,000. So here, as anyone is starting a business with a cash or an asset, that should be posted into a capital account, that is individual or a company's capital account. As the amount in the business is being invested and the capital is increasing, that item needs to be credited. How are we doing that? By using this modern accounting rules. Here you can see capital or equity. If in case of it increasing, that we need to credit the item. Here capital in Somu's business is increasing, hence we are crediting the item worth rupees 50,000. Which is the other account being affected? Here in the sentence, in the transaction, they are specifically saying Somu commenced the business with the cash. Okay, a business can be commenced with the help of a cash, asset, or anything. Here they have specified it's with the cash, hence cash account is being affected. Cash account is a form of asset, current asset. It is a form of current asset, and cash in the business is increasing, hence we have to debit the item. Cash is a current asset. Here you can see that in the rules, cash is a current asset. When an asset increases, we have to debit that item. Okay, so here asset is increased in the business, hence we are debiting that item. So here, what is the journal entry for that? Which item do we need to debit? As per this, debit the cash. Cash account needs to be debited, and which account needs to be credited? Credit the Somu's capital account. Credit the capital account. Cash account debtors to Somu's capital account. Debit 50,000 in the cash account, credit 50,000 in the Somu's capital account. The narration for this is being business commenced by Somu with a cash. Okay, so whenever anybody is starting a business with a cash or an asset, we have to debit that asset and credit that capital account. Next, bought goods for cash rupees 4,000. Here goods are bought. Goods here means purchases are being done for the purpose of business operations. Okay, here machinery, plant, like that, fixed assets are not being purchased. Here purchases are done for the business operation. Purchases of goods are done by paying the cash. So bought goods for cash rupees 4,000. Purchases account is being involved and cash account is being involved. When we say purchase, it is an expense. When we say cash, that is a current asset from the account of asset. So what is happening here? But when we are purchasing something, expenses, we are paying the money, expenses is increasing. When expenses increases, as per the rule, you can see here left side, expenses item is increasing, we have to debit the item. We have to debit the expenses, and here cash, as we are buying something, we are buying the goods by paying the cash, that asset is decreasing here. Asset, when the asset decreases, we have to credit the item. We are crediting that item. So here the journal entry for this is debit purchase accounts debtors to cash account. We are debiting the purchase account and we are crediting the cash account. Debit purchase account debited with 4,000 rupees and the cash account is credited with the 4,000 rupees. Being goods bought for cash is a narration for this. Next, purchased goods from Rahul for rupees 10,000 on credit. Accounts involved here are purchase account, but yes, like in the previous example, goods were bought, that is purchase account. Yes, this is also goods are purchased for the purpose of business operations only, but here the twist is they have specified that it is from Rahul on credit basis. When we are buying anything on credit basis, we have to specify the name of the individual person or an artificial person, because it means that we have to pay that amount in future to that particular person or a business. Here purchase account is an expenses. As we are buying the goods, we are purchasing the goods, expenses are incurred, our expenses are increasing, and we have to debit the item. Like when expenses are increasing, here when expenses are increasing we have to debit the item. Next, credit purchase. As this is a credit purchase, we still have not paid the amount to Rahul. Here it is yet to be paid, that becomes a current liability to us. Current liability, the amount needs to be paid to the Rahul in future by buying, after buying the goods. This becomes a current liability. That current liability is a part of liabilities in your right side, and when the liability increases we have to credit the item. When the liability increases we have to credit the item. How the liability is increasing here? When we are buying the material or a goods on a credit basis, our liability towards others are increasing, hence we call it as a current liability is increasing and we are crediting that item. Here the amount is 10,000. The journal entry for this is purchases accounts debtors 10,000 rupees to Rahul's account, which is credited with 10,000 rupees, being goods purchased from Rahul is the narration for this. Next, cash paid to Rahul rupees 4,000. Now, just with this previous example we understood that we had purchased the goods from the Rahul on credit basis worth rupees 10,000, which was pending to be paid to him in the future. Now they are specified that cash paid to Rahul. Now cash is out of 10,000 rupees which was yet to be paid to the Rahul is now paid to Rahul. How much is paid? 4,000 rupees is paid. In this transaction they have specified cash paid to Rahul rupees 4,000. So here the accounts involved are cash account, as the amount is being paid to Rahul in the form of cash, and also Rahul is a creditor to whom we had to pay the amount, right? So Rahul is a creditor. In the previous example, as we posted the amount of 10,000 in Rahul's account, now we have to decrease in the Rahul's account that 10,000 rupees I had to pay. Now I have paid the 4,000 rupees. So whatever is left is 6,000 rupees that we need to reflect in Rahul's account, right? That's why here we are preparing an entry showing that cash account and the Rahul's account. Rahul is a creditor for my business. So Rahul, the amount is paid to Rahul is a current liability. Now current liability is decreasing here because 4,000 rupees is paid. Okay. In the previous example, current liability was increasing because 10,000 rupees were yet to be paid. Okay, now 4,000 rupees is paid out of that 10,000 rupees. So my current liability towards Rahul is decreasing. Okay, so here cash account, current asset is decreasing. From my hand, the cash which I had in my business, I paid it to Rahul, the creditor of my business. So cash in my hand is decreasing and my current liability also decreasing. So here when the cash decreases, cash is an asset. When the asset decreases, we have to credit the item. Here as per the rules, we are crediting the item. Here next, when the current liability decreases, that liability decreases, we have to debit the item. So hence we are debiting the item here. Journal entry is Rahul's account debtor to cash account. Rahul, why we are specifically saying here Rahul's? Because we had posted an entry saying that we need to pay 10,000 rupees to Rahul. Now we have paid 4,000 rupees out of the 10,000 rupees to Rahul. In future we still left with paying 6,000 rupees to Rahul. That will be reflected in the ledger accounts. The concept of ledger when you will understand in the future. So here Rahul's account debtors to cash account. Rahul account is debited with rupees 4,000 and to cash account credited with 4,000. The narration for this is being cash paid to Rahul. Next is withdrew cash for personal use rupees 8,000. Here accounts involved are drawings account. Like I said in the when I was explaining the meaning of drawings, I said drawings means money withdrawn by an owner from a business for personal use. So here some amount, that is rupees 8,000, is being withdrawn from the business, okay, by the owner of the business for his personal use. So this is affecting the drawings account. The nature of item is the drawing, and when we are drawing the amount from the business, the drawing is increasing. If we are paying the amount against the drawings which we made previously, for example, assume that in my business I had taken 10,000 rupees last month, that is drawings is increasing. Now this month I paid that 10,000 rupees back to the company, then drawings is decreasing to the business. But here they have said withdrew cash for personal use, so drawings are increasing. When the drawings, as per the modern rules, when the drawings increases, we need to debit the item. Here the 8,000 rupees is debited. When the other account which is being affected here is cash account. Withdraw is done in the form of cash. Okay, withdraw is done in the form of cash. So here the cash or even in the form of asset can also be drawn, but here they have specified it is cash. So cash is a current current asset, actually. That is a cash asset. Cash is a current asset which is a form of asset. So here, as we are drawing the money from the business for personal use, in drawings it is increasing. Also the cash of the business is decreasing. So when the cash of a business, the asset of a business decreases, we have to credit the item. So here when the cash of the business is decreasing, when the owner is drawing that money for his personal use, so here the item is being credited 8,000 rupees. The journal entry for this is drawings accounts debtors to cash account. Narration being cash withdrawn for personal use. Drawings account is debited with rupees 8,000 and the cash account is credited with rupees 8,000. Next, cash deposited into bank rupees 5,000. The accounts here involved are simple. One is cash account, other one is bank account. Here the transaction is simple. Cash, you have a cash in your hand and you deposit that cash into your bank. Okay, so cash was also relating to your business only. Bank account is also relating to your business only. Cash is a form of current asset. Yes, bank account is also a form of current asset. Both are asset items only. Okay, both are asset items only. But here one item is increasing, another item is decreasing. It means that when you had some 5,000 rupees in your hand of business, instead of keeping that in the form of cash, you deposited that in the bank account. So here the bank account, the amount is increasing, whereas the cash which you had in your hand of business is decreasing. So here when the asset decreases, we have to credit the item. Here as per the rules, when the asset decreases, credit the item. When the asset increases, debit the items. Cash and bank both are assets, but here cash is decreasing, hence we are crediting the item. Bank account amount, okay, that is increasing, hence we are debiting the item worth rupees 5,000. The journal entry for this is bank account debtors to cash account. Bank account 5,000 debited, cash account 5,000 credited. Being cash deposited into bank account is your narration, or any narration which you write in your own words. Next, paid salary by cheque rupees 3,000. Here the accounts involved are salary paid and bank account. Why bank account? Because obviously when we say the amount, the salary is paid using a check, by check, so check means bank account. Assume that you had to pay 3000 to your employee, you paid it in a check. Okay, that employee will go and deposit that check in the bank, then that amount will be deducted from your business account, right? So obviously here bank is involved, hence salary is an expense and bank account is relating to current asset or a asset item. So expenses here, when you are paying a salary to your workers, okay, employees, expenses are increasing to you. When expenses increases, as per the rule, when expenses increases, you have to debit the item. When expenses increases, debit the item. When the asset, what is happening, the asset, your cash, current asset from your bank, amount is decreasing as your employee draw that 3000 rupees from your bank by depositing the check. Okay, so asset is decreasing for you, you have to credit that. So 3000 debit and 3000 credit. So next journal entry for this is salary account debtors to bank account. Debit the salary account with 3000 rupees and credit the bank account with 3000 rupees. Narration: being salary paid by check. Next, sold goods to Mahesh on credit rupees 9000. So now you, your business, okay, your business, you have sold some goods to Mr. Mahesh on credit, not on cash. Okay, when they are specifically saying credit, it means that you, this person Mahesh is become debtor to you, means he has to pay the amount to you 9000 rupees in future. As of now he has not paid the amount, he is going to pay the amount to you in future. He becomes a debtor for you, he becomes a debtor for you. Here two accounts are being affected. One is sales account. Sales, when you make a sales of your goods, assume that you are a manufacturer of a pen, and now you sold those pen in the market, I mean to the Mahesh. Here let's assume you sold those goods, pens, to the Mahesh. It's, what if he pays you money, okay, in the form of cash or credit, it is a revenue item for you, it is giving you a money. Okay, that may be today or tomorrow, but it is going to give you a money for sure. So sales account is a revenue item. When revenue increases, as per the rules, when the revenue increases, in right side you can see, as per the rules, when the revenue increases, you have to credit the item, you have to credit the item. Next, which is another account being affected here, that is Mahesh account. Mahesh is a debtor to your business, he has not paid the 9000 rupees today, he may pay it in the future. So that is, he is a debtor. Debtor means it is a current asset item, current asset is a asset item. So here when asset item is involved, if it is increasing, current asset is increasing, it is a debit. If it is decreasing, it is a credit. Here current asset is increasing. How current asset is increasing? Debtors, the person who has not paid the amount to you yet has increased. So 9000 rupees in your account has increased in the form of debtor. The person, the debtor here is Mahesh, so that item needs to be debited. Journal entry for this is Mahesh account debtor to sales account. Mahesh account, why we are saying Mahesh account here? If the amount was received in cash, we could have said the cash, but here the amount is not received in cash, amount is received in credit form. In the future we are not sure whether we are going to receive it or not, that is secondary point. But here Mahesh is a debtor, so we are debiting the item to the sales account. Sales account is a revenue item, we are crediting that. Next is narration, being goods sold to Mahesh on credit. Next, goods sold to Mahendran for cash. Now it is direct point. Goods are sold to Mahendran. Okay, for Mahesh it was sold in the form of credit. So Mahesh is a debtor. But here Mahendran, a person named Mahendran has purchased the goods from our business. Now we have sold it to him, that is affecting a sales account, which is a revenue item like previous one only. When revenue is increasing, we need to credit that as per the rules. When revenue is increasing, we have to credit the item. Here we are using the word cash account. Why not Mahendran account? Because it's a cash sales. Okay, if it is a credit sales, we could have used Mahendran account, okay, a person or entity name, but it is a cash sales. Hence there is no need of remembering Mahendran or anybody. So this is a cash sales, that is cash means current asset, and when an asset is increasing, we need to debit the item as per the rules. So here journal entry is sales accounts debtor to cash account. Sales account is 5,000 rupees, debtors to cash account, credit with 5,000 rupees. The narration is being goods sold to Mahendra for cash. Next, borrowed loan from bank rupees 10,000. Now from bank for my business I have taken a loan. Okay, let's assume now bank account is involved here, cash account is involved here. How cash? They have not specified anything about the cash there, but still we have to assume that loan is taken in the form of cash only. Okay, obviously from the bank you are taking a loan, you are borrowing the loan in the form of cash. So here bank account, which is a form of current liability, bank account means borrowings. When you are borrowing something, you have to pay that amount later, right? Today you may be taking a loan from a bank of rupees 10,000, but in future you have to pay that loan amount back to the bank. So that is why that is a current liability. Current liability is increasing for your business, for our business. Hence when the liability is increasing, we have to credit the item as per the rules. When the liability is increasing, we have to credit the item as per the rules. So here cash for the business, that is a current asset, is increasing for the business. So debit item, we are debiting the item. When the asset increases, we have to debit the item. The journal entry for this is cash account debtor, debit 10,000 rupees to bank loan account. Bank loan account, we have taken a loan from the bank, that is 10,000 rupees credited. The narration for this is being loan borrowed from the bank. Next is received commission of rupees 5,000 in cash. Here commission is received means obviously it's a income for the business. Somebody is giving commission to our business, okay, for any work which we might have done. Commission is received, it's a revenue or an income. Okay, it's increasing. Obviously when income, revenue or income increases, we have to credit the item as per the rules. And what is coming, that is cash is coming to the business in the form of commission. So current asset, cash is a current asset which is increasing in our business. Hence if a asset is increasing, then we need to debit the item. So the journal entry for this is cash account debtors to commission account. Cash is debited with 5,000 rupees and commission is credited with 5,000 rupees. The narration for this is being commission received. Next, paid rupees 4,800 in full settlement of rupees 5,000 due to creditor Keerthana. Okay, assume that there is someone, okay, named Keerthana, to whom we had to pay some amount. Creditor here is a Keerthana. It means that our business had to pay Keerthana 5,000 rupees which was due for her. Now we have paid 4,800 rupees to her. That means that she has given us 200 rupees of discount for paying her the amount in a full settlement. So here the accounts involved are, one is cash account, because we have paid 4,800 rupees to her in the form of cash. Okay, we paid her cash or bank. Okay, we paid her 4,800 rupees. Cash is a current asset, so cash is decreasing in our hand because we are paying it to Keerthana. Okay, so now when cash is decreasing, asset is decreasing, we have to credit that item. So here how much amount is credited? 4,800 rupees is credited. We are not paying full for 5,000 rupees here. We are paying only 4,800 rupees to Keerthana. But 200 rupees benefit she is giving to us, okay, for paying her 4,800 rupees in a full settlement. So that what we are receiving is discount we are receiving. That discount which we receive is in a form of income or revenue, so to the business. So here when the income or revenue increases, okay, that we need to credit. So here you can see that when the revenue or income increases, we need to credit the item. So the remaining amount of 200 rupees which was received by my business in the form of discount from the creditor Keerthana is credited. Next, what is the expenses to Keerthana? Overall expenses to Keerthana was, it is expense to overall expenses towards Keerthana is increasing, that is debit. So overall expenses which I had to pay to Keerthana was 5,000 rupees, which was increasing. Now I have paid 4,800 rupees in the form of cash, for which she gave 200 rupees discount. So here the journal entry is, Keerthana's account is debited with rupees 5,000 and to cash account which I paid in the form of cash 4,800, and to discount account which we received in the form of discount, that is income to our business, revenue to our business. So here that is 4,800 plus 200 is a 5,000, is a total amount which was due to Keerthana. So being full settlement made to Keerthana is your narration. So next is, and the last one here is, Dinesh, a customer is declared insolvent and 40 paise in rupee is received from the estate for his due rupees 10,000. See, in the last example, in Keerthana's example, the amount was due from us, from our business to Keerthana. But in this example, amount is due from Dinesh to our business. He is a debtor. He is a debtor who had to pay our business 10,000 rupees, but now he has become insolvent. Insolvent means he is incapable of paying our money back. The amount may go to bad debts, means he may not be able to pay the money. But what they are saying, somehow though he become insolvent, through his real estate, whatever estate the asset he has, from that some amount, that is 40 paise in rupee is received. 40 paise in rupee here means, I have given a note here, 40 paise in rupee here means that 40% of 100%. Okay, if 100 rupees he has to pay to us, out of that 40 rupees is recovered, means out of 10,000 rupees, 4,000 rupees, that is 40% of 10,000 rupees is 4,000 rupees is received from the estate, okay, of Dinesh. But still 6,000 rupees is not received. That amount will not be received. It becomes a bad debts. It may be in future, it may be received, we don't know, but as of today, it mean the possibility of receiving that 6,000 rupees is less, hence we are putting that 6,000 rupees into bad debts. Bad debt is a kind of loss to the business. Cash received is a asset, okay. When cash is received, it is increasing in the business, obviously we are debiting that amount. How much? Only 4,000 rupees is debiting the in the account, but the 6,000 rupees is not received because he is insolvent. He is declared as a insolvent. He is incapable of paying the money back. Now that is considered as bad debts. That is a loss to the business. Expenses or losses to the business. And when the expenses, bad debts are increasing, okay, when the bad debts are increasing, we have to debit that. When expenses or losses, here you can see left side, when the expenses or losses are increasing, we have to debit that item, that is 6,000 is debited. Now amount due from, overall amount which was due from Dinesh was in the current asset because he is a debtor. Okay, debtor, Dinesh is a debtor, hence it is in a current asset. Current asset means asset. Here debtor current asset is decreasing. Okay, so that should be credited with amount 10,000 rupees. When amount is being received or there are no chances of receiving it, it is decreasing and we are crediting that with amount 10,000 rupees. The journal entry for this is cash account debtors. Cash account here is 4,000 rupees which is received, and bad debt account debtors, that is bad debt 6,000 rupees which may or may not come. As of now we are considering it as an expenses or loss for the business. And to Dinesh account, which is total of 10,000 rupees which was pending to be received from Dinesh. As of now we are considering this as a final settlement of this transaction by putting the remaining 6,000 in a bad debts. So here the narration for this is being cash received from Dinesh on final settlement. So here I have explained you few of the journal entries which are very basics to understand the other entries and ledgers. So I hope that you have understood the concept and use it when recording the any similar kind of entries. Thank you very much.